Hello everyone, welcome to the IchimokuCharts.com daily analysis for gold for Wednesday, November the 11th. Well, a bullish day today and a very large green body candle, and the green body means that the buyers have made some solid net bullish progress on the day between the open and the close. We have a continuation of the trend in the first time frame. We have a higher high and a higher low. Previous day we had, in bar chart terms, an inside day, which raised some doubt about the ability of the market to continue up in the first time frame uptrend. But we have the market taking out the previous high, making a higher high and a higher low, and also taking out the high of the candle before that as well. So quite a bullish day. Now, just looking at the top of the candle, there was some downside price rejection there. And that's telling us that the bulls did lose a little commitment throughout the day. They were very strongly committed when the market was trading up at around 11.20, but the sellers came in and sold the market off. But the market closed between the midpoint level and the high, which means that the bulls still maintain control of this market, albeit not strong control, but still fairly quite good control. The close is a fair distance above the previous close, which is telling us that the buyers are keen as well. And when we're looking at the range, the size of the range certainly compared to the previous day, the buyers have become eager, but they're not as eager as they were the previous day as well. And the size of the range is roughly about the size of the range previous to that. So we're not seeing the bulls become extremely eager at the moment, which probably is not such a bad sign anyway. If the market does come off, there is potential support down here at 1084. Obviously, the 1120 area now from yesterday with that downside price rejection will set itself up as a potential area of resistance, and I think we'll see the market trade up through there though. Above that, if we pan out, there's an area of resistance from quite some time ago, and it was a previous area of support at the 1179 region. In between there isn't any substantial resistance on the way up through to there. So there is potential for the market to trade up to 1179. Now, whether it does that or not remains to be seen, and we need to remember that markets act like rubber bands. As they move further and further away from equilibrium, there's the greater likelihood that they'll move back into equilibrium. And that brings into our discussion the Kijun-sen and the Tenkan-sen, which are the two lines here. The Tenkan-sen is the green line, which represents the market in a short-term time frame, and it represents equilibrium in that short-term time frame. And we have the pink line, which is the Kijun-sen, that's in a medium-term time frame. And they're both pointing up very sharply, and that's reflecting the strong upside momentum that the market has, and that's telling us that the equilibrium is moving higher and higher in this market. Now, as the market extends further and further away from those two lines, then there's more likelihood that they will come back to those lines. And if we do see these lines start to flatten out, then there will be potential for a retracement. But we shouldn't count our chickens before they're hatched. There's no signs of that happening yet. The short-term dynamics are bullish. We have good, strong upside momentum in this market. Now, the market is also trading up above the cloud of Kumo, which gives the market an overall positive bias, and it has been for quite some time. And the market's trading up above the Kijun-sen and Tenkan-sen. Now, as we mentioned before, if the market does come off, there's potential support at the 1084 level, but also at the Tenkan-sen and Kijun-sen at 1077 and 1073. And quite often we see that when the market has strong upside momentum, we see that Tenkan-sen pointing up very sharply. If the market does come back to that, then that tends to be the first level that the market will hold at support. So there is a potential level if the market does come off. But there aren't any really good signs that this market will do that, other than this very small downside price rejection that we saw from the 1120 area.